What's going on, everybody? Welcome to 100% Real with Alex. In this episode, we're going to be talking with Anas Abdu, who is a trader. He actually teaches a bunch of courses. I actually had the opportunity of meeting him over dinner, and he has a wealth of knowledge. You guys are in for a treat. So without further ado, let's cue the music.
Best believe, we the best, yes indeed, woo. Best believe, we the best, yes indeed, ho.
Tell us a little bit about your story in general. Also, I think we still have your screen shared. I don't know if you want to take that off. So we can.
I'll unshare now when we come to it.
Yeah, for sure. Yeah, I mean, tell us a little bit about your story. What got you into day trading? Because I know we actually had the opportunity of sitting down. We actually had dinner and we talked a little bit about everything. And I was like, damn, this guy knows what he's talking about. And you were interested in real estate and investing.
Yeah.
I was interested in stocks and getting involved in that. Tell us a little bit about what got you into trading, right? What was your first experience with it and how you got to where you are now?
Right, definitely. Well, before I even got into trading at all, I basically looked at it just like how I would look at, for example, drop shipping now. Like, what the hell is drop shipping? I have no idea about that, right? So it was just whenever you're not in a field or you don't have experience or you don't have anybody that's doing it around you, it's literally a dark cloud. You don't know what to believe. You don't know what to learn. You don't know how to get started, right? Mm-hmm. So I never really looked into it and never was so motivated that I would just go on Google and just search things up. It just happened to be that I was just in the revolving door of high school, college. So I was about to graduate college, right? My whole idea was I'm going to get my exercise science degree and I'm going to be a physical therapist, blah, blah, blah. Right. Yeah. End of senior year. And even before the physical therapist thing, my whole idea, because I didn't declare my major until late sophomore year. So I didn't even know what I wanted to do when I decided to go to college, right? All I wanted to do then was to be an NBA player, right? I was just, because Lincoln High School, I played for one of the best basketball high schools in New York City, won the championship and everything. So I'm thinking even if I don't, go pro here, I could go overseas, play in Egypt, all this stuff, Never really ended up training the right way, eating the right way, doing this stuff, and kept on getting hurt. And then basketball was slowly dying as a dream, right? So I had to think, what am I gonna do the rest of my life, right? Hard question for somebody that's been living in a basketball bubble for 6 years or something. So around senior year, I had one of my friends from 5th grade. I lost touch with him, but I popped up on Instagram. He's driving an I-8. He's 22 years old. How you driving an I-8? Boom, get into it. Turns out he's doing stocks. And I get into it more. I talk to him. He's like, okay, I'm doing this course, blah, blah, blah. I take the course. It was an online course. And then I think a month or 2 months later, he's like, I'm doing it in person. Since you got the course already, why don't you come, for free? You don't got to pay nothing and learn. Boom. And I took one of his first courses, and now, God bless, Stock Market Lab. He has 2,000 plus people all around the world teaching stocks in the crazy community. So I'm forever indebted for him that he was able to introduce me into this world. And it was just a wrap ever since. This was mid 2017. And I've just been on a roll, just, obsessed with it. Why? Because stocks is a combination of two things, right? It's some math. It's not you need to be a math whiz, but there's some math to it. You're looking at numbers. And then the other thing is patterns, right? You want to identify patterns, and also it's the psychology behind it. It's the challenge of trying to, become the best at what you're doing, and nothing will challenge you mentally like trading.
Yeah, for sure. I mean, it's definitely just in the time period, because as soon as this all came, COVID came and took over, I was I've always wanted to dive into it. So I just dived into it, right? So I was on YouTube, I was reading everything and just trying to absorb as much information.
It's a lot, right?
Yeah, it is. And it'll quickly humble you, right off the bat, right?
Mm-hmm.
You'll have 4 good days and you're like, this shit ain't that hard. And then boom, you don't set your stop loss. You go take a poop and you're $400 down. You're $700 down. You're like, what the fuck just happened?
And you give up the whole 4 days.
Yeah, and then now you're climbing back. So it is definitely an experience. So when you first got into it, I know mindset is
Yeah.
definitely probably one of the biggest challenges I would say any trader has.
Yeah.
How did you kind of evolve? Because I know that you were talking a lot when we actually sat down about taking the emotion out of it and just being analytical about your trades.
Right.
What are some like tactics you do, or what are some methods that you're currently following that could help somebody out there who's maybe just getting into it?
Sure, sure. So first, I'm gonna talk about how I would get affected and my journey starting out, right? And then I'm gonna say what I'm doing now to address all the stupid stuff that I was doing earlier, right? So basically, I was the type of person where I would never risk a dollar without being somewhat proficient in what I'm doing, right? A lot of people, they'll say they have 2,000, 3,000, they'll put into the trading account or whatever, and then they'll just trade without even know what they're doing. They'll figure it out as they're doing it, and then they could potentially, lose money for no reason doing that, right? For me, I was like, okay, I got to study. Ever since I was younger, my parents have been pushing me. Oh, you got to study. You got to get good grades, so you go to college and get a good job. It's the same bullshit that everybody
Yeah.
got fed, right? So me, my whole life, I was book smart, not street smart. One bit, straight book smart. Why? Because all the time my head was in the books. 95s, 96, 97s, all tests, just that was the main goal, right? So I was always the analytical, right? So I studied my ass off, read everything I could about stocks, read everything I could about stock psychology, right? But the thing about that is psychology is about emotions. You can't learn about emotions. You have to deal with them before. It's a whole phenomenon, and it's hard to put into words, but it's something that you can feel when you're there, right? So basically what I'm trying to say is, in the beginning, as I'm learning all these things, I learned about every single thing that I should not do, right? I learned all the rules. I learned that I should not lose more than 2% of my account. I learned that I should cut my losses. I shouldn't, take out my stop loss. I shouldn't change my game plan as I'm in the trade, right? I learned about so many rules that I should be doing and I should be following. But as soon as real money became part of the equation, emotions entered the chat, and all those rules went out the window.
Yeah.
Right.
100%. I mean, I 100% agree, because I felt like one of the biggest issues I had was because I do paper trading, right? Obviously, I wanted to get started, so I started paper trading first. I didn't really put actual money into an account until I felt like, all right, I could kind of identify. But as soon as real money came into play, that's when I started messing up, right? So like what I would do is I would get more aggressive with my stop losses, so I would stop out too early before like the breakout would happen.
You wouldn't give it like enough room, you mean, to move?
Yeah. Like I wouldn't let it, like, because like my EMA line, like it would keep dipping below the EMA line, hitting my stop loss, and then returning, going back up, because I was getting too antsy with, I didn't want to lose money.
Right.
And that was something that I kind of learned. But then also you get a little cocky when you start winning, and then I didn't set a stop loss, went to the bathroom. Like that was the biggest mistake I did thus far. And it's all been a learning process. But would you recommend that somebody definitely like get into paper trading first before diving in?
100%. There's basically two requirements for you to actually enter into real-time trading. First one is being proficient with the platform that you're using, right? To know how to buy and how to sell and how to navigate the platform and how to set up the platform the right way, where you're optimizing every screen, whether you're using a laptop or whether you're using 2, 3, 4 screens. Every single, piece of part of your monitor should be helping you in some way, right? So being efficient in the platform, knowing how to buy, how to sell, how to put a chart up, how to, do technical analysis, how to do trend lines, that stuff, you got to figure it out first. You don't want to dive into real money without applying your edge in the paper trading, right? Your edge is basically the edges that I use: market sentiment, stock trend line, like important price levels, high volume, moving averages, and candlestick and chart patterns, right? So in the second criteria for going from paper trading to real money, anytime anybody gets into paper trading, anytime anybody gets into trading, got to plug them right into paper trading. You can never go real money right away, never, right? One, make sure that you know the platform efficiently. Two, most importantly, make sure you're willing to lose money. As soon as you're willing to lose money, 100%, like you're fine losing whatever X amount, then both of these two are good. Go to real-time trading. If those two are good and you're still paper trading, you're wasting time, because you're literally not going to get better. Because I don't care how much you try to convince yourself, like, I'm going to act like this is real money. Subconsciously, you know that it's not real money. So you'll operate out of whatever. It's not, emotions won't come in.
Yeah. And I realized that too, like when I was paper trading, the attachment to the fake money, obviously you're still following the same pattern structure, but you're a little more aggressive with stuff. You're able to kind of, you already know that, like, all right, if I lose, it's not a huge deal. So you're not as crazy with the stop losses. You're not, like, you know what I'm saying? Like, but those are where the rules are set, where you're actually winning. Once you see consistency in your wins and, you're minimizing your risk, that's like the best part about it, right? Like, you already know that you can do it. You just got to be able to identify. I feel like, me personally, my biggest hurdle right now is identifying the reversals. Right? I get too antsy, I think, and I don't let the pattern play out enough to actually catch the reversal with real money. But with fake money, I'm all about it. Like, I get it all the time. But when it comes to real money, for some reason, I really, like, I'm like really trying to time like a bottom, which is impossible to do. Like,
right.
Wait for confirmation to happen before diving in. What platforms are you using currently?
So I'm using Thinkorswim by TD Ameritrade.
Yeah. I definitely made the switch over. I was starting with Robinhood, and I had like a margin account, and then I was just like, nah, I don't like. I think I had I was using Thinkorswim with Robinhood, right? Like, I was trading on that.
A lot of people do that, but Robinhood is just user friendly. For anybody that's starting out, it's probably like the most broken down, but it's not the best in terms of legitimate charting and like putting in actual work. It's not. It's Robinhood would ask you, like, do you think it's going up? Do you think it's going down? Like, it's like beginner, you click in yes, no, blah, blah. But Thinkorswim is definitely, if you want to, it has one of the best charting softwares.
Gotcha.
Known for.
And in regards to Thinkorswim, like, I know that there's some things that you have to kind of set up before actually getting into live trading. Like, I know that there was like a delay on mine that you have to contact customer support, so that you don't have that 20-minute delay. In it. It's kind of, for me, it reminds me of like Photoshop. I don't know if you've ever like dealt with like Photoshop or anything like that, but
no. Like, what do you mean by that?
Like, it's a little more, it looks a little more robust, but once you actually learn it, it's more useful, like with the scans and all that stuff. Like, so many opportunities on there. So also, I know that you are doing a couple of classes at the end of May. You want to tell us a little bit about that?
Sure. So I'm doing like a 12-hour training. So far, I think I got like about 2 people that will be joining. It'll be like a Zoom call thing. So the 12-hour training is basically going to be divided into 3 parts, right? And this is basically the 3 foundations of any professional stock trader: mind, money, method. And it literally is purposely in that order. And by the way, I did not make this up. This is from one of the best trading psychology authors probably that I have read, by the name of Alexander Elder. The name of the book is Trading for a Living. I highly recommend everybody to go check that out. So basically, mind is the psychology. So I take everybody in the beginning. I don't talk about no stocks, like candles. I don't talk about the charts, nothing. Literally gotta go over a couple of points about the psychology behind it, the fears of trading. Why is the game rigged against you? Because of how you are as a human, right? Mind out the way. And then I go into money, which is risk management, right? How do you manage your risk like a hedge fund manager or like a professional trader, where you can minimize your drawdowns and then you let your profits be 2, 3, 4, 5 times as much, right? And then the last part, which most people think is the most important, but it's actually the least important, which is the candles, the volume, and all the edges, right? Because like you already know, these things are easy to learn, and people learn them and they apply them efficiently in paper trading, and they're able to make 1,000, 10,000 into 1 million, whatever the case might be. But as soon as real money enters the chat, it's a whole different situation, right? So I basically go through that, and not only that, right? After 12 hours are done, you'll also be able to be part of a group chat. Right now, I have about 40 students that have taken my training over the last, I think, 3-4 months, and also weekly webinars and stuff. I know exactly how it feels because I've been there. Again, I started 2017, mid 2017, so it's about 3 years now. My whole idea before I started this was, how would I have wanted a trading mentor to be like? How often would I have wanted him to reach out to me? So first thing that came up to me was daily accessibility. So all my students can hit me up anytime. As soon as I get a chance to answer within the day, I'm theirs, right? Because I know all the things that they're going to go through. I'm literally 3 years ahead of them. And since most humans experience the same emotions, everything that I've felt and went through, they're 100% going to go through the same exact thing. So I just want to be a helping hand there as they're going to walk them through. Because it's not about just 12 hours training, right? It's about the continuous education. It's about the, monitoring you, seeing what are you doing good, what are you doing bad, helping you with your blind spots, right? Seeing based on the decisions that you're making, I'm able to know, are you greedy? Are you hesitant? Are you scared? Are you nervous? You don't want to lose money. I was talking with my student the other day, and he was telling me how he was doing so good, and then one day he just gave back all profit. I was like, interesting. Okay, maybe it was something with your energy. Maybe you had an argument with somebody. He's like, oh my God, how'd you know I had an argument with my girlfriend the night before, right? So being in tune, not being in tune with yourself, and being able to notice emotions creeping in, you're able to also see how others can get affected by emotions and what events in their life could possibly happen to affect them that way. Does that make sense?
For sure. No, I mean that's definitely a big thing. I noticed that the days that I have rougher mornings than others, I tend to also have a pretty crappy trading day where I'm not really profiting much, or I'm getting at the wrong times and I keep stopping out. Like I'm saying, like the same things, right? Like it's definitely psychology a majority of the time. Discipline is definitely probably the biggest play here. Like I think mindset and discipline is just like mandatory if you want to become a good trader.
100%. In terms of discipline, there's a fine line, and basically you can have the best discipline in the world, but if you let emotions get in, so you're not like disciplined. Let's say, for example, you have discipline enough to write out your rules, right? You can literally have your rules in front of you, but things happen during the trading day, and 4 types of fears, and this is what I go over in the training, 4 types of fears are able to negatively impact you, right? Fears, because when you feel fear, it activates the fight or flight response, right? So there's 4 fears of trading that have the potential to happen every second of the market day, right? These 4 fears are losing money, being wrong, missing out, and leaving money on the table, right? Now, if these events happen in the market every single day, where a stock could run like crazy and you feel like you're missing out, or a stock can go against you and you could potentially be wrong. It's uncertainty everywhere. And if these events have a chance to impact you emotionally every single day, if you're unable to increase your self-awareness to slowly realize them creeping in on you, they'll get to a point where they surround you so much, and then your brain is over. That's it, you're hijacked. Think about it like your emotions are coming out, and they're trying to go where? To the head of your brain, and they're trying to what? Take the seat of the airplane, and they want to drive it. Now the whole idea is to increase your self-awareness, where you're able to see that the emotions come in way before, so you're able to address them the right way. But no amount of discipline will help you once they grip the wheel. Does that make sense?
Yeah, 100%.
Yeah. So self-awareness is key. Self-awareness.
Yeah. Do you have any like personal situations that maybe where emotion kind of took the wheel? Because I know for a fact
Oh,
that um
tell me about
like
it.
a couple of weeks ago, I actually got a little wrapped up, right, where I did a bad trade, right,
Yeah,
and I again violated the rule of the stop loss, and I pulled it down a little bit just to see if it'll reverse, right, because it kept like bouncing off the VWAP, the middle
yeah.
VWAP, and I was like, but maybe it'll get above it and it'll keep
You
pushing.
start rationalizing and justifying.
Yeah, you start trying to control the market instead of just being a witness of it. You start trying to control it.
Yeah,
So I got a bad trade and I got really mad at myself. The emotions kind of took over, and I was like, I really wanted to dive in again and like get crazy and
take
like,
it back and more.
yeah, double down my money. And then I was like, no, I'm getting emotional. The emotions are taking wheel. I just stopped trading for that day because I already felt myself like out of control, right? Like
Right.
I was about to go all in on blackjack. You know what I'm saying?
Yep, 100%. And emotions, for the most part, for the last 3 years, have been, present. And for the next 3 years, and for the next 10 years, they're going to be present, right? It's not like you're ever going to be in a situation where, okay, these emotions are not going to pop up ever, right? Just to prove that point, I was watching a video of a professional trader I followed the other day by the name of Sang Lucci, and he is during the month of April, I think he was up about 400 grand, and then he kept on trying to short a stock that was just flying. I think it was Shopify. He kept on selling calls, which is basically like a bearish option strategy.
Mm-hmm.
The more it goes down, if the stock stays below where you shorted, you make money. But just to keep it simple, he basically bet against the stock, and the stock went against him, right? And he ended up losing like 600 grand.
Damn.
So the only way somebody can go from up 400K to down 200K is if emotions kicked in, right? So that just goes to show that even if your high self-awareness is very high, emotions can still enter, right? They can still impact you if you don't do the necessary work, right? If you don't catch it. So one example for me, it was, I think about, not this Monday, the Monday before, like about 2 weeks ago, I was trading Square, right? A stock that I'm very familiar with. And the week before, I think I was up about like, 3K, 2.8K, something like that. So, and for some reason, I woke up late that day and I missed Square running, right? And had I been there, I would have probably doubled what I did the last week. So already off the bat, Alex, I was feeling what? FOMO. I'm like, damn, I missed out. Crap. So, but my self-awareness was so bad, right? That I just sat there and I was like, okay, it's okay. Let's just, see what's the next one. So now my brain created a edge that wasn't there, just for the sole purpose of getting in and potentially making money. Sad to say, I ended up trading, I think, 18 times in and out within like the same 1% range.
Mm.
Right? And basically, and I was trading with so many shares, I think about like 2,000 shares in and out for Square. That was about 100 grand. In and out. Because I had so much money, so many shares in, I wouldn't let it go against me so much. And then I would reverse, I would short and then go long. Like that emotions took over like crazy, to the point where I never want to like go through that again. I literally sat from 10 to 20 to like 4 o'clock, right? And ended up being down on the day like over 3K, right? Ended up giving the profit from the last week and then a little bit more,
Yeah.
Had I sat down, had I been more self-aware, right? I would have noticed, hey, there's no edge here. What are you doing? There's no high probability play here. Wait for the play. Square proceeded to end up going from $61 after reporting earnings 3 days later. Yeah, and by the way, when stocks are about to report earnings, most of the time they end up chopping before earnings, because most investors, they don't know what the numbers are. So they're not going to invest. They're waiting for the numbers. So I expected the chop going in, right? But I expected it rationally. But when I became emotional, everything that I know rationally, right? This is literally what happens. This is your trading plan, right?
Mm-hmm.
Now, if you have your trading plan, cut your losses, blah, blah, blah. As soon as emotions come into play, everything that you know logically is literally out the window. Forget about it, right? So that's basically it.
Yeah, I mean, I 100% agree with that. So what is your play around earnings? Like, do you usually pull out because you don't like? I just would pull out. Like me, I
Oh,
just
by the way, Square ended up after reporting earnings 61. You know what it is now?
I actually
$80.
80 bucks. Yeah, I mean, it did.
33%.
Yeah, it went crazy. Square was doing like I feel like all the stay-at-home trades are doing really, really well. Like Peloton is one that I've been trading a lot. I like Peloton. But you know, like it's crazy. Like you really get hijacked. Like you start over trading, which is a huge thing. I feel like when I was paper trading in the beginning, I would over trade like a motherfucker because I have all the money, right? But I would definitely like just get in, try to get out, try to time that next breakout. But once you start doing that, like you have to be able to catch yourself, like you said, right? On average, do you trade with a lot? Like how much do you usually trade with, if you don't mind me asking? Like on
So right now, you mean like my position sizing, like how much money I have in the account, or like what am I?
Like position size, like how much do you usually like put on per trade? Like me, I'm like more like 3,000, 4,000.
So this deals with like the risk management side of it. So basically, before I enter a trade, first I got to know where I'll get out for a loss, right? Most traders, they think about the opposite, like, oh, where am I going to sell for a profit? Because they're so mesmerized by, making thousands of dollars, like right off the bat, which is the wrong way to think about it, because it's a skill like any other that you need time to build, right? So I would figure out what's a good entry and what's a good stop loss, right? Now, let's say those two numbers are $3 apart, right? And now also let's say that I'm comfortable losing $300 on this trade. So you just take whatever you're comfortable losing and you divide it by how far the stop loss is away, and that'll tell you how to position size correctly.
Mm-hmm.
So if you do enter the trade, for example, let's say at 17 and you have a stop loss at 14, right? You can't put your stop loss after you've entered the trade, because then you're not even managing risk properly. You don't even know how much you lose if it goes against you. So the formula is, again, max loss, how much you're willing to lose on that idea, divided by how far the stop loss is away. So even if, and then again, let's say you're comfortable losing 300, right? And the stop loss is $3 away. So 300 divided by 3 equals 100. So your formula, your risk management tells you you can buy 100 shares. So if you do buy 100 shares at 17, right, and you put your stop loss at 14, and you walk away, and you come back and check it, a week later, a month later, whatever the case might be, the worst that can happen is it'll hit the 14, right, and you'll lose 300, exactly what you were willing to lose. And if you truly accept the risk that you're willing to risk 300, you're not going to get emotional, right? But if you don't truly accept the risk, because there's two things. There's defining the risk and there's truly accepting it. Defining the risk is just saying the number, okay, I'll lose 500 on this. Truly accepting it is really, really, really being emotionally okay with being down that amount, right? And I also recommend don't lose more than 2% of your account, right? So that's how you want to, that 300 that we started with, that's how that max loss, you should not lose more than 2% of your account on any one idea. And again, all these rules are nice, and discipline. To be able to be disciplined, you just have to be more self-aware. The more self-aware you are, the easier it'll be to follow your rules, right? You just got to snap out of it before it's too late. Think about it like this. We are robbers, right? We're trying to rob the money from the market or whatever, right? The emotions, right, are the cops. We gotta figure it out before the cops get there. We gotta be able to keep the cops away. If the cops come in, doesn't matter doesn't matter what you got, right? It's over. Going to jail, right? Hijacking, they're gonna take you over. It's over. But if you're able to, leave the bank, so to speak, right? I'm trying to break it down, but I like using examples, but it's not a clear one in my mind right now. Yeah. But if you let the emotions, aka the cops, get too close, that's it. You're gonna be handcuffed. That's a better analogy. You'll get handcuffed, right?
Yeah, that's it.
And
Yeah.
it won't be you making the decisions anymore. It's going to be the cops that are making the decisions for you. You know?
Yeah, yeah. I
I
like
hope
that.
that makes
That's a
I
really
hope
good
that makes
analogy.
sense.
That's a really good analogy. I really like that one. So that definitely makes sense. I feel like mindset is definitely super important. In regard, because I know, do you day trade majority of the time, or do you like swing trade more
So
so?
it depends on the idea, right? And it also depends on how much risk I'm trying to put out and how
Mhm.
much room I'm trying to give the stock to go. So basically, I would have a stop loss, and if it also depends on the market condition, right? Times like these, right? I don't know if I would be too comfortable holding for too long, right? But let's say I get into a trade, I have my stop loss, and the stock runs crazy in my favor, right? Maybe I could, sell half of my position and then let the other half let the other half ride. I don't really go in thinking, okay, how long am I holding this for? Have a profit target, have a stop loss, whichever one gets hit first. And when I don't know when they're gonna get hit. They could get hit, 10 minutes from now, 30 minutes from now, a day from now, depending on how far out you're going. But here's the thing. A lot of people mess up in the way of they go in scalping, they go in thinking, okay, I want to go in and out, but then when it goes against them, they end up holding.
Yeah.
And the fact that it went against them right away, their idea isn't right. And the fact that they're holding means that they're continuously getting a bigger and bigger loss. And the more it gets bigger, the more emotional they get until they
sell at the bottom and then they go back up.
There you go. And the reason they sell at the bottom is because they're emotional, just like every other human out there.
Yeah, for sure, for sure. I mean, definitely. Thank you very much for shedding that light. I feel like that you dropped a bunch of gems in this one.
I appreciate it, bro.
If,
Thanks
if,
for having me.
if you had one piece of advice for a new trader, I know you gave a lot in regards to mindset, money, and method, right?
Mhm.
In regards to like setting up for a beginner, right? Someone who's probably getting into paper trading right now, doesn't really want to bet their own money. What do you feel are like the best things to look out for in regards to method, right? Like, for me, like I use an EMA line, like I use a simple EMA line, and then I also have
Oh, you mean like what's my edge in terms of like
yeah,
strategy, like away from mind and money, just like what I look at in terms of the charts and stuff?
so like when someone is paper trading, right? They know how to kind of set up their chart to actually do the analytics part. I feel like that's the biggest hurdle. I feel like for me, I had to do hours and hours of like YouTubing and what I'm saying, like getting involved in that. But what would you say is your favorite? Obviously, everybody has their different
Of course.
styles and utilizing. But what would you like? How would you set up your chart? If you want, you can even pull up your screen if you want. Like,
Sure. 100%. So, you see it?
yes, I see it now.
Perfect. Okay, so for example, at the top here, I have the market, right? I watch the whole entire market as a whole. There are specific tickers, specific names that they track the entire market as a whole, that being the SPY, the S&P 500, NASDAQ, and the comp. You have to know what these are doing because when these are down big, 75% of the stocks are down with it, right? And to show you that, just to show an example, this is right here. The top here is February, and here, this is like late February, and then here is late March. So in about a month, it fell about 33%. Remember, this is the SPY, which tracks the entire market. Let's pull up any stock, all right? From February, right? From late February to March is Shopify. Doesn't matter how good Shopify was doing, the crash, right?
Yeah.
Pushed it down. If you look at almost any stock during that time, most of the stocks followed. Apple, February, March, right? So that's the number one confirmation. You need to know what the market is doing. Stock trend line. You need to know what the trend of the chart is. For example, here, what I look at, 3 trading screens. And this is also from Dr. Alexander Elder and you'll learn this from the book Trading for a Living. It's called the triple screen trading system, where you have the weekly, right? You have the daily, and you have the 5-minute. On the weekly and the daily, which I have right here, weekly and daily, I draw price levels on it. I put my support and resistance, right? And then I go to the 5-minute, and then I make my decisions based on how they react around those critical levels. So the critical level, price level, is support resistance, highs, lows, alternating highs, lows. When you have bearish candlesticks is also an edge of mine. When you have, for example, a bearish candlestick, right? The price level that I'm watching is the bottom of that candlestick. That would be another way to draw an important price level, because if you have a bearish candlestick and the stock starts printing below, that means that more bears are stepping in. Does that make sense?
Yeah, 100%.
So multiple ways that I teach on how to draw these critical levels. Support and resistance is one of the most, misunderstood things, because psychologically people say it's approaching support or it's approaching resistance. But by identifying a line of support or resistance, you're being biased, right? Because you're assuming it's going to support there or it's going to resist it. Scratch that out and start saying key levels or critical level, right? That's a huge, huge thing, a huge shift in mindset and perspective that was able to help me. Because what ended up happening was, let me share a whiteboard real quick. You see the white?
The whiteboard? No, I don't see the whiteboard. Yeah, I think you need to share. Yeah, there you go. I see it now.
Perfect. So what would end up happening? Where is the?
So for those people out there that actually don't know support and resistance, you want to just like give a quick definition of what that means?
Sure.
Yeah.
I'm looking. Where's the? One sec. There's usually like a toolbox with. Okay, I'll just use it. Here we go. So support or resistance is basically, this is what it would look like in the textbook, right? So resistance, right? We would call it resistance after the fact, right? Resistance is like holding it down, right? So resistance is basically where we can see here that the stock, that price level acted as resistance the last 4 times, meaning that sellers stepped in at this price and pushed the stock down repeatedly. Now, as the stock is going back up, what a lot of people, especially beginners, tend to do is they say it's approaching resistance, right? Now, that's already being biased, because they expect that since this happened 4 times, that it's going to happen again, right? But since they're not expecting it to potentially break, right? They'll maybe short too early, right? Or they'll wait for it to get to exactly to that price, and they'll short right there, right? And then they'll have it completely go against them, right? A better thing to do would be to wait for confirmation, right? And now that it proved as resistance, or potentially proved as resistance, enter here and put a stop loss there. Make sense?
100%. I feel like that was still the biggest learning curve in regards to me being a new trader, is identifying the true confirmation, right? So like, for example, if you want to pull up this chart on the left right here, if you see that it went underneath that EMA line, to the left, right there.
Yep.
You see how it went underneath that EMA line, right? But then it continued up. I would think that it's now in an upward trend, but then I would set my stop loss too close to the EMA line, where it would dive underneath the EMA line, take my shit, and then continue going up.
Let me ask you a question. If you were doing a survey, right? Would you do a survey, and you wanted to actually like get information, you wanted to get solid information, would you do a survey with 10 people or 10,000 people?
I would do it as 10,000 people, as much
10,000, right? Yeah. So basically, the 8 EMA on the 5-minute chart is only activity that's happening this 5 minutes.
Yeah.
Which is minuscule compared to the daily and the weekly, which has data for the last 3 years, 2 years, 1 year, right? So The important
every morning I definitely look at the 180-day chart to see what direction anything is going. I'm trading ETFs right now though.
Going further back than 6 months even can help you draw these important critical levels as well.
Mm-hmm.
When you have the weekly and daily, you're able to draw these levels. So for example, this stock right here, I had this critical level on it because of the daily. Let's see exactly why I had it. 293.89. $293.9. Yeah. So you see here, this was 1.3.
Yeah, bounced off it twice.
Yeah. You see the top of this candle right here.
Yeah.
So this is a critical level that I had drawn out. Now, after you draw your critical level on the daily and the weekly, it's automatically going to get updated into the 5-minute chart, right, of the same stock.
Yeah.
So here, we want to look at the trend of the stock. Trend of the stock here is up, right? So we don't want to go against it, right? If we are going to go against it, we got to be in and out quick, right? Now, here's the critical level that we had. We've seen that the stock opened. Well, I'll just use this one. So here we've seen that the stock opened at 291.5 and we had a critical level at around 294, right? We've seen that the stock pushed up and then sellers kicked in, right, and closed lower. And then we've seen the next 5-minute candle, bulls kick in. This candle made a higher low and it closed above not only the critical level, but over the 8 and the 20 EMA, right? So any time over the critical level here would have been a good entry, right? And then that you could have potentially ended up catching, ended up running about like $8. And with stocks, it might not be as crazy as a return, but learning this price action and then knowing how to do options, you're able to maximize your returns. And if you're able to manage risk the right way, you can really see some good results. But before getting into options, you have to get efficient at reading stock charts real time, right? Because everybody can read stock charts, paper trade.
Yeah, 100%. I agree with you. And I actually had a lot of people reach out to me talking about like getting options. I'm like, bro, don't even touch that until you actually know how to do technical analysis right. Like you're going to lose all your money.
Yeah, it's time value. Like if somebody invests 100K into a business or invests 100K into, or if he puts 100K into the stock, for example, the stock would have to go to zero for him to lose that 100K. If somebody were to put 100K, let's say in an option contract that expires next week, if next week comes and they don't do nothing about it, that 100K is gone because that contract has time value.
Mm-hmm.
Once it expires, it doesn't matter how much it's worth. You can have $1 million worth of options. If it expires without you flipping it or assigning it or like, if you don't, assigning it is basically, I'm not gonna get too into it. It could get too complicated with options, but there's a couple of different things that you can do when you do buy the contract, right? Mm-hmm. But me, I usually just focus on just flipping the premium, buying a call or put and selling it for higher when the stock goes, my favor.
Yeah. I mean, I definitely recommend for anybody out there, new, do not touch options until you can, physically get your stuff together in regards to being consistent with stocks.
100%. And I'm so grateful that I didn't get introduced into options until like 2 years into my trading journey.
Yeah.
I was able to just build the experience with stocks and even though I was losing early on, I would have lost 20, 30 times as much if I would just did options.
Yeah, man. I mean, I 100% agree. Like I didn't even touch it. I plan on not touching it until I'm consistent as hell with my.
Be consistently profitable with stocks, And going back to what you said with like, what do I look for as well? High volume. That's very, very important. The difference between a strong move and a weak move is the volume. And what basically is volume? It's the amount of shares that were exchanged. So let's say I sold 10 shares to the market and somebody from the market bought those 10 shares from me, it's not 10 plus 10 is 20. It's the total amount that was exchanged, which was 10, right? So once that transaction happens, volume is increased by 10. So if we, for example, if we go here and we see this chart, and we see the bottom right here, these two numbers.
Yeah.
Okay, so the red or the green would be for that day, and then this one would be the average. So if we go here, and see in the bottom, this stock traded that day 1.3 million shares, right? That does not, just because it's green, that does not mean that 1.3 million shares were bought, because remember, for every buyer, there's a seller, right? It's not that it's more aggressive. It's not that it's more buying than selling. It's always the same buying than selling. But what ends up makes the price change in a certain direction is one side gets more aggressive than the other. What does that mean? That means if a buyer is aggressive, that means that he's willing to pay the ask. Think about it in real estate, right? Let's say a house is 200K.
Mm-hmm.
And the asking price is 200K. Aggressive buying would be the equivalent of somebody going and buying that house for 200K. Like, yeah, give it to me. I want it.
Mm-hmm.
I want that house.
That's Nassau County right now for everybody. For anybody who's interested in real estate, that's Nassau County right now. Everybody's paying asking or above asking for some reason. I don't know. The demand is high.
Everybody's doing that right now?
Yeah, right now. Like, even with all this craziness, people are still moving into Nassau right now.
Really?
Houses are still moving, yeah.
Interesting.
Yeah.
With all the uncertainty, people are still paying. So,
I mean, that's the FHA market, right? So a lot of houses under 500,000 compared to Queens and Brooklyn, where everything is kind of at a pause because you're looking at $1 million price points.
Right.
So I guess it's different, but kind of the same in the sense where like demand and supply are very, very important when it comes to things.
And it's the same exact thing with stocks. Let me ask you this: what would make somebody pay the ask price? What does he have to believe?
That the value of the properties can continuously go up, or that it's a safe investment long term.
Exactly. And the opposite is true for when a stock or when something of value decreases.
Mm-hmm.
Sellers, why the hell are the sellers willing to sell for the bid price? What must they believe?
Oh, they need to know that. Well, they think that the prices are going to go down. Or
exactly. So all price movement is the accumulation of all investors and traders' future perceptions of the market, right? So do you think it's rational to think, coronavirus came out with even crazier numbers, the stock is going to go down even more, right?
Mm-hmm.
That doesn't really make sense, right? That's why, I tell people really take news with a grain of salt. News is good, but if you make biases based on the news is going to be the worst thing that you're ever going to, have part of your edge.
Yeah, because some people are just momentum. Like, they're just about like trying to catch the news. Like when Gilead first announced that they potentially had like a cure for the coronavirus, they had something to treat it. The stock like jumped up like $10-15, right off the bat.
I'm not saying that no moves happen from them 100%, but the reason that these moves happen is because news brings catalyst, right? Mm-hmm. Catalyst meaning like it's putting fuel to the fire, right? It's putting more attention. You're not the only one hearing this news. A lot of people are hearing this news. So it gives more attention to the stock and potentially pumps volume in the stock. Mm-hmm. Which direction it's going to go, we don't know. But what we could do is see what's crazy on the news, right? Or what's really has all the attention, and then do our charting, and then make sure that, we're not getting in because of just the news. We're not getting in just because, like, for example, a lot of people would see, Boeing 787 crashes, right? They see it like 7 a.m., like, what? And then they go 9:30, like, I'm shorting this bitch, right? I'm betting against it, right? Like, there's no way that the airplane is going to crash and the stock's going to go up. The stock has to crash too, just like the airplane, right?
Yeah.
So,
I mean, I feel like this market with this craziness has been going against that, right? Like every time we get some bad news, like, yeah, there may be a little bit of a dip, but then things go right back to normal and pushing higher.
Because you got to remember, we're down 35%. So maybe the market already discounted it.
Yeah.
Right?
For sure.
Where we go from here, we don't know. But what we could do is we just continue charting, make sure that we stay out of the chop. Okay. We literally, our whole idea now is to just sit on your hands until the opportunity presents itself. One of the craziest opportunities happened to be on Friday. But because, I haven't been like, the momentum has been a little bit lagging, right? And I haven't been on top of it as much as I want. I was unable to capture it. Had I been on top of my game and consistent, like I was like March,
yeah,
right, would have caught it. It ended up going like, you could have got a 10x return on the video. Did you see it pop?
Yeah, I mean, I've been watching, but I'm trying to narrow my focus on the things I'm trading. Like I've been trading a lot of ETFs. Like that's kind of what I've been focusing on. So I try not to get like, I do watch other charts and I do watch some stocks that I really, really like. Square being one of them. I mean, Shopify being one of them. And I look at them, but I don't actually trade in them. So I don't get like too engulfed in it. I want to like focus on what I'm on, right? I'm trying to like narrow it down to like 3 per trading session, right? And if I can't figure it out, I just choose not to trade that day, right? And just watch.
And aside from all the edges or anything that you can potentially use to have a higher probability trade or whatever, the most important thing that is going to be important to you as a trader or as a real estate investor or anything is going to be your energy, right? Because when your energy is right, you'll be able to capitalize on all the opportunities that the market is providing. If your energy is absolute crap, the market can literally show you in your face how much money, like right there, like by how much money, I mean, like, let's say you define an edge, the market can keep showing you your edge, but if your energy is crap, you'll hesitate. You won't get in, right? You're nervous, you're scared, you don't want to lose money. So the most important thing is to not let yourself get to that point, right, of emotional hijacking. And to do that, it's about increasing self-awareness. Now, if you're at a point right now where you already feel emotionally hijacked, you just got to take a step back and do some deep reflecting, right? Because a lot of people have been emotionally hijacked for the last month, 2 months, 3 months, right? What started off as a bad mood, right, became, a temperament, and then became personality, right? Just because you weren't, addressing it as time moves on.
100%, man. So I mean, thank you for that. I mean, I feel like that was definitely very, very enlightening. For anybody who does want to sign up for Anas's class, what do they gotta do? They just gotta DM you? Like what is it?
Yeah, you can just check me out on Instagram. I'm pretty active on there. I post a lot of stories too as well. Even if you don't take the training or whatever, like you can still benefit a lot. I put a lot of free content on my stories. I share a lot about psychology. I share a lot about my trading methods and stuff like that. So basically,
Awesome, man. Thank you very much. And yeah, I mean, I think I'm gonna attend it myself. I'm excited. Definitely interested in learning about your strategies and what you're doing. It's cool. Like it's different, but it's the same, right? Like obviously, you're looking at things way differently than I would with your experience, right?
yeah.
But yeah, man, just what you said right now has already like shed some light on what I plan on doing, right? So it's just education, like just by being present and around people that are doing what you want to do, you're just going to pick up things naturally.
100%. Surround yourself with who you want to be.
Definitely, man. Well, thank you so much. And yeah, man, I can't wait to put this up. This is going to be a really good podcast.
Pleasure was all mine, brother.
All right, man. So enjoy the rest of your day, all right, brother?
For sure. Talk to you soon.
Bye.
Bye.